Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast, another visual experience. So head over to YouTube or Spotify if you want to check out the animated video version. Also, happy Always Free Day. For you guys watching, I'm holding up a copy of Jason Graystone's brand new book released today called Always Free. It's something that he's worked on his entire life, and he's literally been writing it and trying to get it published for the past 7 years. And it is finally here, and I could not be more excited for him. He wants this to be a bestseller. So if you want to support, head over to Amazon, buy a copy of the book. The Kindle edition is only 99 cents. Leave a review, share a selfie on social media. Anything you can do to support Jason Graystone. You know the man deserves it. So let's give it back to him and show some support his way. This episode actually kind of piggybacks on the topic of Always Free, because it involves a conversation about financial freedom that I was having with a friend of mine the other day. The other day I was doing some work and I had a friend of mine, she was in my office talking about something else, and she was watching me as I was doing my chart work and my analysis preparing for the Trading Edge video. And we started talking about finances, and pretty much long story short, she was unhappy with her performance. She puts a certain amount of money into this account manager and she makes money back, but she's like, I should be making more. And it got us down the whole conversation of getting into investing and the different forms of it, which is something that we've spoken about a few episodes ago here on the Trading Coach Podcast. I think it was like investing for beginners or something like that. And I wanted to follow up that episode because we spoke about kind of the first step you should take in your investment journey. I wanted to follow up that episode and really talk about the 4 tiers of investing and really how they progress. So tier number 1 is going to be the passive investor, or the passive investor. And this is someone who is just throwing money into the market. They have investment exposure, but not by doing anything themselves, meaning that they have like an investment account, they have a 401k, they have a Roth IRA, they have something like that, and they are consistently putting money into it, whether it comes directly out of their paycheck or they're adding extra, or saying that, hey, I'm going to put this much into this account on a blah, blah, blah basis. Now, in most cases, people like that, they want exposure to the financial markets. They want to set up something for their retirement, like a long-term investment, but they have little to any idea or understanding of what their money is actually going into, right? If you've been to any of these places or have any account managers of your own, typically they just ask you, if they ask you, right, how aggressive do you want to be? Do you want to be aggressive? Do you want to be moderately aggressive? Do you want to be conservative? And then there's all types of formulas based on what you decide on where they put your money. So the next step after that is going to be the independent passive investor. And this is very similar to the passive investor, but in this case, you are making your own investment decisions. Don't get me wrong, you're not necessarily picking individual stocks and doing stuff like that, but you are deciding that I'm going to invest myself and not go through an account manager or anything like that who's going to charge you an account fee and whatnot. We'll kind of dig into that a little bit later. But typically, these type of investors are taking more of a simplified approach. So rather than having a massive amount of diversification in their portfolio, they're doing something where it's like, hey, I'm going to find an ETF, one that mimics, the S&P or the NASDAQ or the Dow or something like that, or whatever index you want to mimic. And I'm just going to consistently invest in that on a regular basis, back to the whole dollar cost averaging type of deal. Now, obviously, the more experience you get, you can start off by just picking an ETF, and then you can kind of dig into individual stocks if you want. But most people doing this kind of just, they don't really have the time, the effort, or the desire to really learn any more about the stock market or the Forex market or crypto market, whatever you're doing it in, than they need to. So they tend to just stay with kind of the most simplest approach. But obviously, as you get more knowledgeable, you can diversify if you want. Now, the biggest pro of being a passive investor, either the passive or the independent passive investor, it's got to be the simplicity, right? It is very simple. It is very straightforward. Take money out of wherever I'm taking money out of, put money into whatever I'm putting money into, sit back and repeat next month or bi-weekly, whatever your deal is, over and over again. It's not a lot of brain work in there. It's kind of everyone else is doing the brain work. You're just throwing the money at it. Why is that important? Well, it means you don't have to spend time doing lots of rigorous research, or you don't have to be in front of a chart for hours and hours and hours performing analysis or back testing specific strategies, all the stuff that we talk about. It's pretty much just plug and play. So if you're someone that's looking for the quickest way to get started, that passive investment approach is going to be it. And of course, the independent I keep want to say passive aggressive, right? Passive investor approach is going to be a way that you can do so, yet kind of take control of your own finances in a similar way. Now, for those who want to take even more control, right, and perhaps outperform the passive investors, the next step is going to be the active trader. Now, when most people hear the word active trader or trading particularly, the first thing that pops into their mind is day trade, day trade, day trade. I'm not really quite sure why that is. I guess it's the most popular form of trading that we hear about in movies and shows because it's all action and we like our action flicks. But when most people hear this, it intimidates the hell out of them because it is scary, right? I don't know if you've ever seen day trading in live action, especially if you're someone that doesn't know what's happening, but it's a lot of monitors, it's a lot of assets and instruments on those monitors. Everything's blinking and changing colors and moving this and that, and people are typing and shouting out numbers and making buys and calls and sells and blah, 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 right? And you're like, how the hell could I ever do this? Another scary thing about it, aside from the actual trading activity, is the fear, I guess, or maybe not fear, but the understanding that, man, if I want to be good at this, I really have to dedicate a lot of time and a lot of energy into this craft. And that is another thing that people typically don't want to do, or in some cases just can't do because of whatever lifestyle choices they've made. Speaking of lifestyle choices, I have a great story to share with y'all. I'll probably share it at the end because many of you guys heard it before, but I hope I remember to share with you the story of the Xbox guy, because it is one of the funniest yet realistic stories of someone being afraid or not willing to dedicate the time needed to accomplish their goal. And it was okay, but it's weird, right? You're gonna judge, I promise, but I'll do that at the very end. So not only is day trading intimidating and confusing and time consuming, but it also means you got to put in a lot of work, a lot of effort into acquiring a skill. As a passive investor, take money, throw it, take money, throw it. It just does its thing, right? Active day trading, you actually have to learn a skill, and you have to be good enough at that skill not to get destroyed by the markets. And I'll give you a secret, right? 90% of traders get destroyed by the market. So you've got to be in that top 10% of good just to survive. We're not even talking about making millions of dollars, right? Just to survive and turn some sort of profit, which is a scary thing to think about. Add to that, even with me saying 90%, you got to be the top 10%, I've probably intimidated you. Many of you are listening to this saying well, Akil, why would I be the one that is going to be the upper 10%? I don't have a Ivy League degree. I don't have experience on Wall Street. How can I possibly be successful? Well, I'll give you one thing or two things that should motivate you to understand that you could be successful. One, this guy, no Ivy League degree, no Wall Street experience. I got 2 D pluses in my micro and macroeconomics class in college, changed majors because I was afraid of math, yet somehow I made it. And then this guy, same situation, started at the very bottom, right? Know nothing about the financial markets, just had pure grit, determination, desire, and taught himself to be a consistently profitable trader. So if us two knuckleheads can do it, you should be able to do it too. And that's just from a knowledge perspective. You do have to have the work ethic. And that's one thing that we share. We are always learning. We work very hard. We are stubborn with kind of our goals. If you have those type of character traits, the learning part's going to be the easy part. That's just going to come with time and effort in it. So that part shouldn't scare you away. Point of the story is you don't have to be some super smart guy like what they try to make it seem like you need to be on YouTube or even those account managers. And between me and you, the reason that they do that is because they just want to manage your money. And the easiest way for them to get you to give them money is to make it seem like this stuff is too hard for you to do it, so I will do it for you, and you gladly pay them. Now, although day trading is certainly one form of trading, which is probably over popularized or over commercialized, whatever it may be, it's important to understand that all trading isn't day trading, right? The truth is, most traders, both retail and institutional traders, don't day trade, right? Many do, but many also intraday trade and swing trade. And I'll go ahead to explain those terms in a little bit because it's somewhat common knowledge across the industry, but depending on where you go, you may hear different definitions for them. So we'll start with day trading, right? If you think about day trading is kind of, think lower time frames, active trading, right? Day traders are usually operating on time frames underneath the hourly, and in 99.9% of cases, right, they are clocking in and clocking out, meaning that they have a set period of time that they dedicate to day trading. They do nothing before that time. They do nothing as far as trading wise after that time. They clock in, trade, and then when their session's over, they clock out, cash out, take whatever they've made or lost for the day, and then come back to fight another day, right? So you're not holding positions. You're in, you're out, kind of like a straight mercenary. You do your job and you get away, and you do your job the next day. In fact, and again, for the audio audience, I apologize. I have a famous clip from me, right, showing an artistic visualization of what day trading looks like. I'm going to run it for you. Maybe if it's too long, I'll do some like voiceover editing in the background and explain to you guys what is happening for you guys that are not watching the video version. So let's check it out for a while, then I'll be right back. So it starts off with a visual of Jason Stapleton walking in with his coffee, heading to the office, throwing a newspaper under his shoulder, saying hi to everyone, just starting his day like a normal person would. He's coming into the office, slams the paper down on the ground, puts his coffee down, turns on the TV, CNBC financial pundits are on, sits down at his trading desk, looks into the screen, analyzes a little bit, and then gets sucked into the monitors. He transforms into this dark world where he's dressed in all black, standing out the window, staring as if he's about to go into war, perhaps the last war. He turns around, the elevator door opens, or he pushes the elevator door button, elevator opens, he walks in, pushes a button, and now the elevator door closes in this dramatic cinematic sequence. Elevator scene changes, I guess you say. He walks downstairs, dead eyes, snarl on his face, walks into a parking garage where we filmed this, and is walking, pacing like he's getting ready for some type of duel, right? A shadowy figure passes by. Camera should zoom out soon. And look who he's facing. It's me. With hair. Transforms to me in front of my computer setup. I'm smiling and smirking. We slowly zoom out. I'm looking at one monitor and it transforms into about 8 with all different trade setups. And the battle is about to begin. Jason stone-faced looking at me. We approach each other, walking slowly to each other. It's a standoff like a duel. It's intense, and then we both start charging at each other. Music starts going. We're fighting, we're punching. I swing, he ducks underneath it. He comes, I swing again with a backhand. I punch him in the face. He goes down onto the ground. I'm shaking my fist. He swipes up. Oh, I jump, try to kick him. He catches me, slams me against a pole. I'm beating his back. I fall to the ground. He's kicking me. I'm on the ground. I get back up. I'm fighting. I'm trying to shake it off. He cracks his neck. He kicked me. I block. I punch him. He blocks. I punch him. He blocks. I punch him. He blocks. And then he hits me in the back, pushes me in the leg, grabs my face with both hands. I'm struggling, and then he stops. He looks up. We're back in reality. He's got a phone call, or OG, our assistant, comes in and is delivering him a message in the middle of his trading day. He's distracted. I punch him in the face. Down goes Jason on the ground. He goes back to his computer. He's mad. He's upset. Urgh. He's crawling on the ground back in this kind of reality trading world, or virtual reality trading world. We're fighting again. Punches him. I overhead slam him. He kicks me while he's on the ground. I get back up, kicks me in the back. I jump off the pillar, flying punch to the face. He's down again, struggling, and then Scene goes to another guy. It's Darren, right? Reading this book on a couch. This is the real world again, called Trading for Dummies. He's taking notes. He's highlighting like a newbie trader nerd, looking at his computer, typing a few things in. He thinks he's ready to join the battle as a newbie trader. His smile goes to a serious look, takes one more look at the Trading for Dummies book, and then boom, he gets sucked into the computer, right? He's now dressed as a ninja, a white ninja in a ninja gi, all white headband. He goes down that same elevator, which represents us going from the real world into the trading world. And he does little ninja kung fu thing. Elevator door closes. Back to our scene in the basement. Jason and I are fighting. It shows Darren in the elevator. There's like elevator music. He's biting his nails, kind of waiting to join the trading battle. I'm getting punched up against the fence. Darren is doing like this yoga type of position, warming up and getting all lubricated and ready to join the battle. Elevator door opens. Jason's punching me in the stomach. Darren's there. We stop fighting. We look at him. We laugh at this newbie trader. He bows. We proceed to punch him in the face at the same time. He flies back into the elevator door. Noob. And then the elevator door closes as he's knocked out. Bell rings. That is the end of our day trading day. We give a little fist pump. We start limping and walking back. We're dirty. Our shirts are untucked. And we're done for the day because that is day trading. Once the bell is over, we remove our positions. Back to the real world. Jason gets up. It's dark now. Turns off his TV. Stands up from his computer. Walks away. And lights go out. And scene. What a fight. All I can say is he's lucky that bell rang because I was just about to make my comeback. Anyway, so if day trading is smaller time frames, swing trading is going to be kind of the opposite. That is going to be longer time frames. Now, the term swing trading actually comes from something else. It's about trading swings and whatnot. But the definition for swing trading has kind of morphed over the year to be commonly known as kind of a time duration of trading, where if day trading, you're holding things for minutes to hours, swing traders are typically looking to hold positions for maybe a few days to a few weeks. So they're probably operating on a time frame. 4 hour would be the lowest, 4 hour and up. So let's say like a 4 hour to a weekly chart. Now, in the middle of that, right, this is going to be intraday traders. So day trading, short periods, swing trading, longer periods, right? Anything after swing trading is probably like short-term investing or position trading. I've heard it called as well. Intraday is going to be that short little spot in between swing trading and day trading, kind of like the hybrid version of it. So an intraday trader is going to be operating probably 4 hour, hourly, somewhere in that range. And where a day trader is holding it for hours or minutes to hours, swing trader days to weeks. Intraday trader is probably minute to days, right? I'm personally a swing trader and an intraday trader, so my trades vary from, I can hold things for maybe an hour. I've also held positions for days, every once in a while weeks as well, but I don't like to be in those positions. But anywhere from minutes to weeks as you see it, or high minutes, close to hours to weeks is going to be that intraday trading style. So let's go to the pros and cons of active trading. One is control, which a lot of people like. I work with a lot of traders, and many of them get into trading because they want to take control. It's just something that they value. I value that as well. But another thing, and this is probably the main thing, is that as an active trader, you have the potential to massively outperform the markets. If you look at an index probably giving you a double-digit percentage return on a regular basis, let's say between 10% and 20%, that's cool, right? If you look at an account manager, maybe they give you even less than that, depending on kind of what their goals are. Again, a lot of them aren't motivated to actually make you money. As an active trader, you can make massively more than that. Again, using me for example, I typically make anywhere between 40% to 60% on my trading per year. 60% is if I have a really, really, really good year. I was having that until good old dollar yen decided to be a meanie this summer, but still a possibility. But even on the lower end, if I'm making 35 to 40%, that's probably anywhere between 2 to 4 times what simply investing in the S&P 500. Sorry, I got Mike Bellafiore on the mind, as his books are so good. Ooh, I love them so much. Thank you, Mike. But yeah, it gives you the opportunity to massively outperform what you would get otherwise. And obviously, more money is a big motivator for many people. And that was the motivation for, again, the friend of mine that I was talking to. And again, just to touch on this account management thing, just to be clear before I forget about it, when I say that their goal isn't to make you money, it's true, right? As an account manager, and this is someone who used to manage accounts personally as well, account managers' jobs, right? What they do is they take an account management fee, right? They charge you a fee for managing your account, your money, as they should. Now, the goal isn't necessarily to make you as much profit in the market as possible, because that doesn't necessarily change their fee. Their goal is to acquire as many people as possible and to keep charging this fee and hold your money so they can keep getting their fee over and over again. So depending on who you're using, the motivation is different. When I managed money, I put a clause in there that said, hey, I only take profit when I make you new equity highs. And I was young, so I had to do something like that to attract investors. But it also kept me motivated. It also told my clients that, hey, I'm actually working to make you money. I'm just not keeping your money here and doing nothing with it. But most don't have that clause. Most is just like, hey, you pay me X% a year and that's what I get. So as long as they're doing okay, they're not losing you money, because if they lose you money, then you start to panic and pull your money out. They're going to hold your money. They're going to keep that account management fee and everyone's happy. Unless you want to make more money from the market, then you're not happy, right? So let's just make that straight. Now, we spoke earlier about the 3 fears that come with actively trading, the 3 scaries that come with it, right? And I kind of want to debunk some of these myths, or at least give you something to consider when you're looking at them, right? So one fear is that everything is moving so fast, it's super scary, I don't understand what's happening. And that is true if you are a day trader. But who says you have to be a day trader, right? I gave you guys 3 different ways that you can trade, right? You could be a day trader if you want and dedicate a certain amount of time of the day to do it. You could be an intraday trader, which gives you a little bit more action, but not as much craziness as the day trader. Or you could be a swing trader that really has a little bit of action and it doesn't really require that much of a time commitment. The other day, I shared with you guys a video on my YouTube channel, which you should subscribe and like to, and make sure that notification bell is set so you don't miss next episodes, like the video episode I'm sharing right now. Talking about a daily strategy called the daily chore, and how, one of our traders reached out. He was a janitor and he said, I've been trading the daily chore. It's been amazing, blah, 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 blah. Akil, Jason, you guys are awesome. I know, right? But pretty much we shared that strategy. And actually the signal that we took a look at in the video won the next day. But it was something where you're literally trading the daily chart, which means you're looking at only one candle a day. So ask yourself, right? How much time and dedication is needed if you're only looking at one candle a day, right? You have a very specific strategy. You're looking at one thing. That one thing either happens or doesn't happen. You can literally spend, right, 5 to 10 minutes a day looking at your chart, and that's it. Even myself, as a swing trader who trades multiple strategies, and again, keep in mind, I've been doing this for a very long time, so I know exactly what I'm looking at, and I can analyze the market pretty well, if I do say so myself. It only takes me probably about a half an hour a day to do my analysis. I'm looking through and I either a signal, no signal, signal, no signal, setup, no setup. And it doesn't require that much time. It doesn't require the same amount of time as a day trader who's sitting in front of his computer for 3 hours analyzing the market. So if you're confused a little bit about everything moving so fast, if you're trading on a daily time frame, it doesn't move that fast at all. You have 24 hours to think about what you want to do or analyze the markets in the way that you need to. I kind of touched on this next one already, but we talked about the time investment that is needed to trade. Again, if you're going to be on a daily chart, it may only take you 5-10 minutes if you're trading a single strategy, maybe 30 minutes max to analyze your entire portfolio of pairs. That's not a big time investment at all. So that takes out that myth. Now, I would say this though, there is going to be a massive time investment in learning how to trade. You need to learn how to trade. You need to back test a strategy, right? That is something that you can't shortcut, nor should you want to shortcut, right? So unfortunately, you can't get around that, but hopefully that's a one and done thing. Once you do that at the beginning of your journey, when it's done, you have the rest of your journey to kind of reap the benefits of that. I like to tell traders this a lot, where it's like, man, I struggled for the first 2 years of my trading career, and it was the longest, most dreadful 2 years of my life. But I've been successful for the next 16 years after that. And as I look back now, part of this is because I'm getting old, but I can vaguely, I remember some of the struggles, but I can vaguely remember how I felt during that time, just because the 16 years of profitability outweighed those 2 years of suck. So it is going to seem like a lot at first, but remember, we're playing the big picture. We're not playing for results tomorrow. We're paying for consistent results for a massive amount of time for the rest of your life, hopefully. The last one is going to be the knowledge. And trading can be intimidating, like I said, because we think that we have to know a certain amount. We think that we have to have a certain degree. And I told you guys that both me and Jason don't, and we've made it. So anyone could be able to do it if you have certain characteristics. I would say this. We often think that as traders, we have to know everything because we see what's on the internet and we hear about this and that and that and that. And even I'm even guilty of this in my live room, right? I trade a lot of different ways. So in my live trading room, I'll look at advanced patterns. I'll look at trend continuation. I'll look at counter trend. I'll look at this. I'll look at that. And a new trader may come in and be like, whoa, 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 hey. You just said 18 things and I don't understand any of them. How am I ever going to learn all this stuff? I'll never be at that level. The truth is, you don't have to. All you need to do is learn one thing. If you can learn one thing and be really good at that one thing, you can use that one thing to start producing profit in the market. My mentor always told me this. He said, Akil, start with one strategy on one time frame on one pair. I should just be doing ones and I'm doing threes. And boom. Once you have mastered that, then if you want to add and grow, you can grow from there. But that is a starting point. Do something that allows you to make money and then build your trading business from that on or from then on. Now, that being said, I'm not saying that you should be a one-trick pony, right? I have a podcast coming up. I'll probably do it next episode now that I mention it, about having the ability to understand the market and how it allows you to make adjustments and adapt and stuff like that. So that is certainly positive. Don't be mad if you're someone learning multiple things, but we're talking about a newer investor that just wants exposure to the market. We're not talking necessarily about someone that wants to be kind of an active trader, at least at first. We're talking about someone that just wants to get their feet wet and get started. And for that, one thing is enough. So hopefully that explains the 4 tiers of trading to you and kind of removes some doubts that you may have. By the way, if you're interested to learn how to trade, the place I recommend is us. www.tier1trading.com. I recommend starting with the 14-day risk-free trial membership. Gives you access to courses, gives you access to live sessions, gives you access to a great community of traders, and there's no sneaky auto bill or anything like that. You get 14 days on the platform, and then you just can't log in after that. And before I go, so the story about the Xbox guy, I'll make it short, right? So I was speaking to a trader on TradingView, interested in trading, picking my mind on stuff. We're going through the process of kind of like what it takes to become a trader, right? And I'm walking them through all the things you have to do. You got to learn it, right? So I get to the point where we talk about back testing. He's like, okay, he stops me. He says, hey, do I really have to do this back testing thing? I'm like, yeah, well, you have to do back testing because you want to ensure that your strategy or system is profitable. You want to build that mental edge as well, build your trading psychology and your mindset. That way, when you trade it live, you're not freaking out and you have all these doubts and blah, 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 blah. He's like, well, man, that sounds like a lot of work. I'm like, yeah, it is. It's just, you're going through hundreds and hundreds and thousands of trades or blah, 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 blah. It does take a significant amount of time. And he was like, well, what if I don't have the time? We went through the whole thing where it's like, hey, let's walk through your schedule from wake up to sleep and let's see if we can squeeze out 2 hours a day. And we're going through the schedule and blah, 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 blah. He's like, I go to work, blah, 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 blah. I come home. He's like, I play with the kids because the kids are very important to me. I put the kids to bed and I play on the Xbox a little bit and then I go to sleep. Right there. I found it. We want to keep the kids in. Family time's important, right? But that Xbox time, how many hours a day you play Xbox? He's like, like 2 to 3 hours. Maybe it's, what if we remove those 2 to 3 hours of Xbox and boom, that became your backtesting time. And I was all excited. I was like, yeah, I did it. I found the solution. Like I love digging in and finding the places that people miss. And he's like, I like reaching out for a virtual high five. Like, yeah, we did it, bro. And I'm holding it there. And he's like, yeah, but, and I start creeping my hand down in my head like, yeah. He's, yeah, but I really love playing Xbox and I don't think I can give that up. And I'm like, My first reaction was like, what the? But then I thought about it more and I was like, this is very mature of this trader, because there's two options, right? One, you straight out say, I am not willing to put into work, right? The time, the effort, the energy, the sacrifice that it takes to be a successful trader. And knowing that, I don't waste any time or any money in the market, and I can start looking for alternatives like the passive investor. On the other hand, a trader relies on themselves. They know they're not willing to give it up, but they're like, yeah, I can do this. I can do this. Actually, I have a third scenario I'll add to it, right? They say, I can do this. I can do this. And then they start doing it. And then they realize they're not dedicated to doing it. And then they quit and give up. And now, not only did they lose their Xbox time, but now they lost, I don't know how many hours, days, weeks, months, and money as well in the market, because they started on a journey but never finished it. The third option, which I just thought of, is they decide, man, this Akil don't know what he's talking about. I'm going to do the best of both worlds. I'm going to keep my Xbox time and I'm going to keep trading. Take that. And they do so, and they ultimately become, they join the 90 club, right? The 90% of traders that fail, and again, they waste some time, and then they blow a lot of money, right? So it was actually very cool that this trader was able to recognize right away that, hey, this ain't for me, because I didn't have to go through any of those other paths. So again, it's many of you guys always hear that story and you're like, oh my gosh, I can't believe it. But I actually think it was a smart choice. Hope you enjoyed the episode. Again, Jason Greystone, Always Free book out now. Today is the release date. Support Jason. Head over to Amazon, get the version. I think the paperback is like $25. The Kindle version is 99 cents. Support what Jason's doing, leave a rating, leave a review, and let's get him on the bestseller list. Until next time, plan your trade, trade your plan. Take care.